and welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, I hope everyone had a great weekend and you've all come back very refreshed for the week ahead. While it's a bit low on the data front, there is a number of key things which we should be keeping an eye on this week, most notably the Chinese data, which we've got coming throughout the week. We've also got things like the Bank of England the decision on Thursday. It's Super Thursday. We've got the inflation report, statement and minutes to come alongside it, so there's plenty to look forward to there. So far today, it's been quite a volatile start to the trading week. If we look in the equity market space, for example, we are seeing some decent gains in the European equity markets. The US is due to open in about 15-20 minutes, looking at about a flat open at this stage, so not much movement there, although we did see some gains earlier on. They seem to be phasing out as we do approach the opening bell. In the currency space, the focus is really on the Japanese yen at the moment, and we are seeing it making some quite significant losses today, down just over 1% against the euro, pound and the US dollar. Now, this may be in relation to the minutes which we had overnight from the Bank of Japan, which showed quite an even split of those who believe that we are seeing positive impact from negative rates and those that believe they're gonna have negative implications and we're not seeing the positive effects of them, which does cast doubts over whether we will see further negative rates imposed from the Bank of Japan in the coming meetings. Although, of course, we should note that when they did impose these negative rates earlier on in the year, there was also a bit of a split then as well. So I guess we'll have to wait and see what further commentary we get from this. There was also talk of the fact that we are seeing some growth as well in Japan, which is potentially a positive. But like I say, we are seeing a sell-off in the yen so far. So maybe there was a bit of a dovish. Maybe people have taken some of these comments or some of these notes to be slightly dovish. Although the other thing is it could be quite technical. In euro yen, for example, we are seeing potential bottoming in this pair, potential double bottom for those technical traders, which could prompt a bit of a surge higher in this pair. We are seeing bottoming in other other yen pairs as well. If we look at the commodity space, we are seeing broad-based declines. We're seeing things like gold, silver, copper, iron ore all trading quite significantly to the downside. Brent and WTI crude have been quite volatile earlier in the session. A lot of stories coming out at the moment in relation to oil. We've got the fires in Canada, of course, the oil sands region now continuing to spread. It's been reported that up to just over 1 million barrels a day of oil are now effectively offline, which is quite a significant number of barrels, and really does influence this whole supply side decline that we've seen in oil over the last 18 months or so. The other story that there's been over the weekend has come from Saudi Arabia. We've seen that the Deputy Crown Prince Mohammed bin Salman has relieved Ali al-Naimi of his duties and replaced him with Khalid al-Falih. Now, Naimi had been in charge, the oil minister, for the past 20 years. This is seen as a very significant move. Some people pointing to the inability to get a deal done on a production freeze last month as a reason behind the move. Other people citing this just as a move by Mohammed bin Salman to assert his authority. We've seen, of course, there have been a lot in the news recently about the reforms which have been put in place to make the economy less dependent on oil, and this is seen as being a move I guess towards this new this new period for Saudi Arabia. I guess one of the things is going to be, how's this going to affect the Saudis' position on oil production going forward, and this is what's really going to affect price. The early signs suggest that it's not going to affect it too much. In fact, if anything, it makes it less likely that we are going to see oil price freeze or cut, with al-Falih apparently being also being in favour of letting the market do its thing, pricing out these higher cost shale producers and effectively letting the market determine the price and letting it just play out as it is. So like I say, this makes a production cut or freeze less likely at the next meeting in June. But like I say, it'll be interesting to see what we do get from that meeting and whether we've moved closer to or further away, and that could dictate how oil prices move in the second half of the year. Now, if we take a look at the economic calendar now for the day ahead, we can see that actually let's start with the China moves overnight. We had the trade balance data from China, and we saw that exports and imports both fell year on year, 1.8% and 10.9%. The declines here much bigger than we were otherwise expecting. Now, it's worth noting though that these numbers are quite distorted by the timing of the Lunar New Year here. One of the economists at Capital Economics, for example, pointing out also that if you take the 3-month average from January through March for this year and last year and compare it with April, it's actually quite favourable numbers here, and suggest that things aren't necessarily as bad as they seem. It would suggest that maybe the stimulus from both the People's Bank of China and the Chinese government is actually having some positive effect. I guess the important part here is going to be the important thing here is going to be, are we going to see more stimulus from both the PBOC and the government in order to try and sustain some improved growth here, and are we going to are China therefore going to hit their aggressive growth targets, or is there going to be this increased fear about a hard landing in China? Again, worth noting that exports actually picked up in yuan terms. So while this is a decline in exports of 1.8% in dollar terms, in yuan terms they actually did pick up. So the weak currency potentially playing a key role here in these improvements. Now, still to come today, we do have one piece of the US data to come at 2 o'clock. We've got the Eurogroup meeting taking place throughout the day as well. And this again is going to be discussing Greece and whether they can agree on the next tranche to release the next tranche of the bailout for Greece. This is going to be dependent on a number of economic reforms. We're seeing protests in Athens right now outside the parliament buildings because the Greek government, Syriza party, led by the Syriza party, whose leader is Alexis Tsipras, have actually voted to impose cut in pensions and a tax hike as well. This is something that they previously promised to absolutely not do, but they've done this in order to try and get the next tranche of this bailout so they can make their future payments, but also in the hope that this will then lead to some form of debt forgiveness. Again, another controversial issue, given that this is something that the IMF and the other Greece's other creditors currently disagree on. So we could hopefully get some positive progress to come from this Eurogroup meeting today. Aside from this though, like I say, it's looking a bit light as it is for most of the week. China going to be a key focus this week, and of course we've got the UK to come on Thursday. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.